Hey everybody, Boris Lansford from BK Forex. Welcome to our daily technicals. Euro-dollar hugging 129 for 322.13. As always, past performance not indicative of future results. Trading Forex carries high level risk and may be suitable for all investors. High degree of leverage can work against you as well as for you. Before deciding to trade any such leverage products, you should carefully consider your investment objectives, level of experience, and risk appetite. Possibility exists that you could sustain a loss some of your initial investment, and therefore you should not invest money you cannot afford to lose. You should be aware of all the risks associated with trading on margin and seek advice from an independent financial advisor if you have any doubts. The information, including commentary trade IDs provided by bkforex.com, should not be relied upon as substitutes for excessive independent research, which should be performed for making investment decisions. BK Forex LLC and Com are merely providing this information for your general information. The information and opinions presented do not take into account any particular individual investment objectives, financial situation, or needs. All investors should obtain advice based upon their unique situation before making an investment decision and should tailor the trade size and leverage of their trading to their personal risk appetite. BK Forex LLC will not be responsible for any losses incurred on investments made by readers and clients as a result of any information contained on BK Forex LLC. We do not render investment, legal, tax, or other professional advice, and if investment, legal, tax, or other professional advice is required, the service of a competent professional should be sought. Well, all eyes on the euro here, but sorry, I just want to pull up a better chart here. All right, let's just pull the pound chart and change it to the euro to start with, because obviously 129 is the equilibrium level that everybody is watching here. It's sort of, if you look at it from a technical point of view, it's just become now comes into what is a classic technical pattern, which is this kind of a compressing triangle. And generally, this is very much indicative of compressing volatility, which usually results then in, of course, explosive volatility. And the direction of the volatility tends to be a forecast of the direction of the move as it resolves itself. So, in other words, we're centralizing ourselves around 129. If we have a sharp move above 29.50, it's likely that the resolution of the move should be positive. That is, we try to force now to 130 and perhaps even try to close the gap at 130.50. Conversely, a break here below the 28.50, which we've been talking about as a key critical level, definitely opens up the possibility of 12800, possibly even 127 on a longer term basis. It also leaves a very, very ugly unfilled gap, which technically suggests further downside action. So obviously everybody is sitting around here waiting for resolution on Cyprus. For the longs, the solace that you can take from this is that we have not really broken the 28.50, although there's certainly a lot of negative reasons to want to do so. For the shorts, that is a concern. The fact that 28.50 is still not been broken despite all of the pressure to the downside. But on the other hand, 29.50 has also not been really broken. So this kind of irresolution definitely suggests that it's best to wait and see how the price action moves before deciding where the directionality lies. Cable, similar kind of a thing, by the way, in terms of, certainly much less pronounced, but cable sort of similarly doing the same thing, although in a sense that we're holding 51, now we're kind of holding 52. 52 is really a seminal level here, and the reason why is because if you look at dailies, even if you just go back like 6 months, you see that the 52 has been a cap since really the start of this month, beginning of last month, and a break above 52, really a break above sort of the 52.25 level, 52.35 level, does open up a possibility that we now have a further recovery all the way up, possibly to 54 and maybe even 55, which was 55 was the really seminal break here was that in February? Yeah, it was in February. So that would complete the full bull cycle here, the full move of the pound. But until this kind of a break of the 52.25 happens, there's a very, very serious overhead here, and buying in front of that overhead could be very dangerous because it could just be a turn. If those who are resistance traders, this may be another opportunity for resistance traders with a stop at above 52.25, because that obviously would suggest that momentum has broken to the upside. As to the downside, it's very tight. 51 supports, a little bit below 50.50 supports. You would have to have a massive turn back to the downside for a test of the lows. It doesn't look like the lows are going to be tested. It does look like the lows have been set in for the time being, but churn may still be in front of us for the next couple of days as this thing tries to resolve itself. Aussie, on the other hand, did resolve itself nicely yesterday. Remember, we talked about the idea that 104.15 was a critical level to resolve to the upside. That did so, but now we're kind of just marking time at 104.50. Aussie is actually notorious for sort of breaking these levels, then consolidating, maybe even coming back. But coming back here now means 103.50 as the key support level. That's become the much more stronger support level. So there isn't, it doesn't look like there's much downside risk beyond that. To the upside, a break above 104.50 with a stronger move really does open up the possibility for 105. There isn't much overhead until you get to 105.50. So there's still run here. One thing to look at, which I found interesting, is if you look at the Kiwi has been very, very strong yesterday. This was a power move yesterday that went 100 points in the Kiwi. And this 83.50 now becomes a very interesting buy on level. So you have this big resistance 83.50. Breakthrough above here definitely opens up the possibility for 84. So you're building up this possible burst of forward motion in the COM dollars. Lastly, dollar yen is really not acting well, and that's I think is kind of very interesting. Is we had the failure at 96, right? We went 95.50 to 96. Everybody got excited, but we had a failure at 96, and now we had a very significant break here, 94.50, and it looks to be that given the dynamics of how the momentum is trading right now, we're closing in on the key 94 level here as a support level here. Now the gap, by the way, when you look at this, yeah, this is it. The gap at the beginning of the week, right? So we filled the gap, came back, and now break the lows of the gap. That would be a very, very negative construct. So you need to be watching this very carefully. There's clearly, I think, going to be some support and some positioning in front of the 94 level, but a break of 94 would suggest a steeper correction in dollar yen, which is something that is almost off the radar right now as everybody is focused on the euro. Conversely, or similarly, you also need to be looking at euro yen, of course, which is also starting to come back down. And again, the lows in the euro were 21.50, effectively 21.56 on the gap. Similar kind of a situation here where you could be breaking those lows and a move below through to 121 would trigger much further risk liquidation. So it's kind of how the day shapes up. Euro is a no-show for the time being, but watching obviously for the breakouts. But the yen is starting to move, and that's worth noting as the day progresses. This is Boris Schlossberg wishing you guys the best of luck and the best of trading. Over and out.